Hello and welcome back to Dukascopy TV. Now, last year we saw a number of high-profile scandals that did nothing really to help boost confidence in the banking industry. Today I'm speaking to the Strategic Financial Analyst, Eric Bjertnes, about global growth and stability in 2013. Eric, welcome to the studio.
Thank you. Nice to be here, Tom.
So, Eric, obviously, I mentioned last year we had a number of high-profile scandals in investment and in banking. You have over 30 years' experience in finance. Do you think that after the financial banking and investment scandals over the last 5 years, that maybe we hope perhaps this year in 2013 that there's going to be a change in attitude amongst the banks?
I feel that, and I feel also that it will give stability and more predictability because there's been so much volatility. And also the banks will be more careful because they will need to be investigated in certain ways, and they don't want to be involved legally and with fines and all this and this. There's already been so much of it, so people are getting fed up.
So those fines, you think, are generally going to sort of scare people away? I mean, they're...
I think there should be a little bit of change. Maybe there should not be any more regulation at all, but the people responsible all along the line should be given much harsher punishments.
Okay, so the overall feeling is that 2013, some of the scandals that we've seen, for instance, the Libor issue last year, those sorts of, we had JP Morgan as well. Those sorts of scandals we're not going to see so much this year. We're not going to see it at all.
I think that you know, there's so much liquidity in the banks. The people, the clients, they don't want to invest because they don't know where to invest. There's a complete confidence breakdown. So we need to go back to the old, real things, the intrinsic value things such as commodities, food, and high-tech companies, but that are in production, things we can touch. Then real estate is another thing which can be good as long as it's not done as a speculation only, like the subprimes and all that about 5 years ago.
Okay, let's focus on so-called Ponzi schemes, or as some people may more familiarly know, pyramid schemes. Are they still prevalent at the moment? And I mean, if so, what do you think will happen to them in the future?
I think they'll get less and less because people are getting more and more scared. People need to have feelings about investment advisors and banks, and they need to, investors, private clients need to check up more carefully what they're doing. Of course, there is a certain amount of greed of every human being. So if somebody is offered 100% profit in a few months, that should be looked at very carefully.
But Eric, how does one monitor such? You know, you mentioned that people the attitudes are changing, that they're not necessarily tougher regulations, but almost, you know, scaring people into the position where they can't rip off clients anymore. But how do you actually monitor such activity so it doesn't happen again?
Well, I don't think governments can really monitor because of the regulations, because they put a lot of criteria, and that criteria is not always good and valid. It has to be personal feelings, very subjective. If an investor is going to believe a bank officer, that investor has to be sure the bank officer is doing a right job and is not going to create a big loss on some stupid things. There are many people who gain a lot on Ponzi schemes, but the majority, they lose out very badly. And they lose so badly that they're in problems. And that's because they get bad information from bankers or financial advisors promising what is not there. So we have to go back to intrinsic products. About the monitoring business, it is very psychological. And that is what makes a Ponzi scheme. It's the psychology behind so-called salesmen or messengers. They're trained how to come across to the client psychologically so that the client will buy the thing.
Okay, so with this in mind, Eric, with this, because at this stage it's still very much kind of theory, we'll have to wait and see throughout the rest of the year, but to tie this all into global growth and stability, do you think then that that is partly one of the main issues, not just say the slowdown in trade, I'm talking about globally, I'm talking about, do you think that growth and stability, one of the biggest problems with maintaining growth and stability is because of this very fraud or corruption, if you like?
Well, absolutely, because people are getting fed up. They want to know that their money is being put into proper investments, into good use. So they would prefer to make 10% a year instead of 100% a year and losing perhaps that 100%.
Okay, well, Eric, thank you very much for coming in the studio once again today.
Welcome, Tom. Thank you for having me.
That's all we've got time for on Dukascopy TV right now. We'll continue to bring you updates and interviews, so do stay tuned with us throughout the day and, of course, throughout the rest of the week. But until next time, goodbye.